Hey, welcome back everyone. In this video I'm going to be showing you how to day trade using the Fibonacci strategy that I'm explaining in this course. But before we get to the video, check the link in the description for the full course and get 50% off if you use the top link. Okay, I'm not going to be going over what I previously mentioned in the other videos. I'm just going to be showing you some examples of how we day trade using the strategy. And to start, the first thing you need to do is to go on the 4-hour time frame. We're starting from the 4-hour time frame this time. We're not starting from the daily time frame or the weekly, the 4-hour. So we can have more frequent trades. But everything else applies. We look for market structure first, then we look for an entry, then we manage. So starting off, let's do this uptrend right here. Upward move. Let's cover that. So the first thing you look for, if you look over to your left over here, you can see price was going down first. Price was going down from the lower highs and lower lows. I wrote the structure right here, and because this was the previous lower high, you gotta look for price to break above this point in order for you to say that the structure of the market structure has changed from a downtrend. Get rid of this. From a downtrend to an uptrend. And if you look closely, you can see that price broke this structure right here over here. So now we're going to be looking for buys. So once price broke this structure and start to retrace back, the first thing you need to do is draw a fib. You draw a fib from the previous higher low or the beginning of the impulse move, the previous impulse move. Draw a fib from here up to the top before the retracement. Now you switch from the 4-hour time frame to the 1-hour time frame. And on the 1-hour time frame, similar to what I taught before, you look for an entry. You look for an entry using the MACD and the moving averages. And in this case, since we're looking for a buy, we want the MACD line to be below the 0 point and then for it to cross above for a buy entry. Yeah, for a buy entry. And we also want the EMAs to cross, or for the blue EMA to be above the red EMA, or in this case the 10 EMA to be above the 20 EMA. And if you look close, you can see that one of our conditions were met. The 10 EMA is above the 20 EMA, but on the MACD now, if you look close, you can see that the MACD line or the blue line never crossed the 0 point. It never crossed it. It continued above the 0 point all the way up until the trade is already gone. So in this case, this would have been a no trade because our conditions were not met. Let's look for another example. Okay, so continuing the same move, as you can see, there was an impulse move right here, continuing the trend, this impulse move. So you know what you need to do, draw a fib from the beginning of the impulse move to the end of the impulse move, and then you wait for retracement back to one of your points. You switch to the 1-hour time frame, and here you look for an entry using the MACD and the 2 exponential moving averages. And in this case, looking for a buy. As you can see, price came down, bounced off of the 0.5 on the fib before giving us an entry right about here. So let's mark this out. Hold on a while. Okay, sorry about that. So our entry would have been right here. Once the blue EMA is above the red EMA and the MACD line cross above the 0, and our stop loss being either at these, since we entered the trade above the 0.382, stop loss would have been around the 0.618, or if you want to be 100% safe, you put your stop loss at the 0.786 right here. But to be more realistic, we would have put our stop loss right a bit below the 0.618, which would have given us a losing trade as prices continue to drop, hitting our stop loss of 58 pips. But if you look closely, you can see that we had another entry because right where price hit the stop loss, it continued to go up, and our second entry would have been when price crossed above the 0 point again right here. When price crossed above the 0 point right here with our stop loss at the 0.6 again, 0.618 for a 39 pip stop loss, and our take profit to be either at the 0.2 at the negative 0.272 point on the fib, and if that's not a damn 1 to 3 risk to reward ratio, you go up to the second take profit above here, and if that's not a 1 to 3 risk to reward ratio, you just go and set your take profit for a 1 to 3 risk to reward ratio like this. So in this case we would have profited 118 pips, just like that. So we lost one, we got a 1 no trade, and we won one, winning 118 pips. As you can see, price found a peak above here before dropping down and breaking the previous low, so indicating a downtrend or the beginning of a downtrend. So price came down, came up before coming down again to form a lower low, coming up again to form a lower high, before dropping down again to form a lower low, then coming up again to form a lower high, then dropping. That just indicates that price is going down. Okay, since price broke structure with this big impulse move right here, we can try that starting from the top. No, not from the top, starting from right here. From right here all the way down to the end of the impulse move. So let's drop down to the 1 hour time frame now. Okay, now we look for an entry. As you can see, price, the MACD line is above the 0 points, which is a good point, which is a good indication that price can give us a selling entry. So what we need to do now is wait for price to drop below, or the MACD line to drop below the 0 point on the MACD indicator, which happened right here, right there. And as you can see, since we're looking for sales, we want the 20 EMA or the 20 exponential moving average, or the red, to be above the 10 exponential moving average, the blue. And our stop loss, since we entered below the 0.382, we can put our stop loss at 2 points. We can put it all the way up here at the a little bit above the 0.618 to be completely safe, or we could have put it above the previous high right here, this previous high, which is also above the 0.382 point on the Fibonacci. So that will be our stop loss. Then our take profit would be a 1 to 3 risk to reward, since it did not come to a 1 to 3 at the negative 0.272 point, or the negative 0.618 point. So we would have went all the way down here for a 1 to 3 risk to reward, which would have profited 209 pips. So I hope you enjoyed the video, hope you learned something, and I'll catch you on the next one. I'm out.